All right, this is your breakout watch list for the upcoming week from July 24th to 28th. Now last week, the market started to pull back on Thursday after Tesla and Netflix sold off after earnings. And this week, we have way more earnings to deal with than last week, but I still found some emerging themes that I wanted to cover in today's video. Now typically in these videos, I cover the top 10 swing trading setups going into next week. But in this video, I have 13 setups coming from 4 different emerging themes. But before we get into the charts, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. Now the 4 emerging themes that I noticed during my weekend routine are crypto, cruises, stocks from Argentina, gambling stocks, and a few other setups that I wanted to cover in today's video. So here are the 13 stocks that we'll be covering. Let's jump to MarketSmith and start breaking down these setups. For this video, I'm just going to go by themes and then alphabetically within that theme. So right now, Bitcoin has been consolidating, potentially breaking to the upside or the downside. We're not quite sure, but there are a couple crypto stocks that I'll be focusing on Monday and the rest of the week. The first one is APLD. This is one that really had a nice move, up 78% on 3,000% the average daily volume, had followed through all the way up to around 1025, consolidated to the 21 EMA, had one big candle up and reverse, and after this candle on the 23rd of June, a lot of traders just took it off their radar because this is a lot of volatility. Honestly, I took it off my radar as well. It closed under the 21 EMA, and it did so on heavy volume. So why are we talking about it now? Well, after that move, we had another rally back up to 10 that failed, and then it's been consolidating here, trading under the 50-day moving average a couple days. Now, if you're a swing trader on Twitter, you notice a lot of people just throw the stocks that are under the 50-day moving average out of their general watch list. And then when they pop back up over the 50-day moving average, they end up chasing those stocks. So although we closed Thursday and Friday under the 50-day and the 8 and the 21, as you can see here, we are very close to that launchpad setup if we could just pop through all those moving averages. So I'm looking for a break above all of those moving averages as a potential entry point. Right now, the 21 EMA is at 816, so right around that area for APLD. Probably the leader in the crypto space is Coinbase, at least the most familiar stock. This one had a really nice move on the 13th. That was up 24% on nearly 400% the average daily volume, closing back over $100. Since then, we basically traded sideways. We did pull back on Thursday with the rest of tech stocks. That was down 8%. Friday, lower highs, lower lows, but still closing right above $100 after shaking out that 8-day EMA. This is one where I would be looking for Bitcoin to actually start to curl up and break out before I get involved. But anywhere I can get in around that $100, $103 area and then get my stop loss under the low of Friday, which would be 98.71. That's my plan of attack. Again, waiting for crypto to actually, or Bitcoin to actually break out before playing Coinbase. And the last crypto stock on my radar going into next week is RIOT, R-I-O-T. This is one that had another very, very nice move from about, when was that? $12 up to 2060. So not quite 100% move, but may call that like 60, 70%. I don't have my calculator with me right now, but from 20, it pulled back to the 8-day EMA, had a nice shakeout day, just like Coinbase did before closing in the upper half of the daily range on Friday, which if you take a look at the indexes, NASDAQ and the S&P 500, both closed right at the low of the day on Friday. So some relative strength there. Just looking for a break over Friday's high, 1885, and then potentially getting the stop loss. It's tough because that's a pretty wide range, but with crypto, there is that inherent volatility. A couple more days tightening up, Monday, Tuesday, Wednesday, would really improve this setup where we can get a tighter risk and then size it up appropriately. But for now, if we're taking a break over Friday's high, you have to do it with a little bit less size just to keep your stop under the low from Friday. So we checked off the crypto theme. Now we're on to cruises. Carnival Cruise Line is the first one on my watch list. There's also a European Carnival Cruise Line, CUK. That one looks exactly the same, but pretty tight as well. Basically, pulled back to the 21 EMA after a very, very nice run. Minor rally to the 8-day, rejected, pulls back, and then on Friday, good relative strength, up 1.3%, closing at the high of the day versus, again, the index is closing at the low of the day. This is another setup that if we can pull back to the 21 EMA in a very nice and orderly manner, then we can keep our risk under the low of this pullback and around number $17. So ideally, this pulls back and then we can get our stop loss under $17 and manage our risk there. Next, we can go to RCL. This is the Royal Caribbean cruise line, a little bit stronger than Carnival, coming off that 21 EMA already. So if we do get that pullback in the market, in Carnival, or in cruise lines altogether, this pulling back into $100, getting situated there, and then keeping our stop under the 21 EMA and the pullback here. This is just the more powerful stock out of the two, so might as well get our money into that one. NCLH, this is Norwegian Cruise Line. A little less strength on this one. Very, very quick down to the 21 EMA. Didn't quite bounce like Carnival or what was the other one? Royal Caribbean. Has earnings in 10 days, so keep that in mind as well. But just wanted to add this because that entire cruise kind of group is shaping up as well. Now to the gambling stocks. We'll start with the stock that in that group everyone knows. This is DraftKings. Incredible, incredible relative strength last week. This is one that I haven't found a way in. It seems to like bouncing off that 21 EMA, but we're a little bit extended from that point. So if I'm not buying around a 21 EMA, I tend to use those trades as performance boosters. So I'm trying to get in, I'm trying to be right away, get my stop loss to break even, and then sell partials into strength. When you're buying around the 21 EMA, you can hold for a little bit longer because you're expecting a rally up, a pullback, and then getting your stop into your entry point and above the 21 EMA. But obviously, like if we're buying here, we can't get our stop to the 21, below the 21 without taking very, very large risk. And that's why I'm using this trade as a performance booster, not just, not like a long-term hold. But really nice move. Lots of volume coming in here as we rallied. We closed under the 21 EMA, then we gapped up and rallied right through the 21 and the 8-day. Continued that move up, 8.3% the next day, and then an unfilled gap, followed by 7 days of really tight price action, bouncing at the 8-day EMA on Thursday. Nice relative strength on Friday, up 1.3%. So this is one just looking for a break over Friday's high, 31.30, and then getting the stop loss under $30. About a 3%, 4% risk there for DraftKings. The next gambling stock is GENI, and this really reminds me of the stock ARLO. I know it's completely different industries, but the way it trades, we had a really nice move up here on massive volume, over 1,000% average daily volume, strong closing range. We rally up to $8, and then as the market comes in, this pulls back into that 8-day EMA. We had a nice shakeout on Thursday, then some relative strength on Friday, up 2.3%. With this, the HVC, the high volume close from this day is $7.30. So if we can get a pullback into that $7.30 area, $7.30 area, getting into the position right around there so we can get our stop loss under Thursday's low at 7.16 with a reasonable amount of risk, 3 to 5%. That would be ideal here. So this is GENI. And the last gambling stock is another sports betting. This is a Switzerland-based company though. This is SRAD. Going to a weekly chart, you can see we're right into a stage 2 uptrend now. We just broke out last week on above average volume, or 2 weeks ago, sorry, 11.4%. Last week up 3.4%. Some good relative strength there. Really tight price action, just like DraftKings, just like GENI. This one up 0.8% on Friday, closing right at the high of the day. This is one where a couple days where it trades sideways, tightening up would be ideal. Then we can use that high from Friday, 15.15, as a potential entry point. Otherwise, just pulling back into that 8-day EMA and then getting our stop under the low of this flag at like 14.37 is another way to trade it. So for the gambling stocks, we have DraftKings, GENI, and SRAD. The last theme that I want to focus on is stocks from Argentina. Full disclosure, I do have positions in both of these already. They're both 9% positions, 9 or 10% positions, looking to add to them next week. The first one is YPF, and this is also an oil and gas company. And there are a couple of oil and gas stocks. I'm not going to go full into it, but a lot of oil and gas stocks are also setting up, BORR, NINE, coming off the lows with a lot of power. So with kind of two themes in mind, this is one that I want to be focusing on. I did trade this before during this flag. I bought it on the 5th and then immediately got stopped out the 6th as it broke under the previous day's low. But one thing that I've been trying to do better of is when I'm wrong on a stock is to keep it in my universe and keep checks on it, because I tend to be a little bit quick, a little too early to emerging themes. Like they show up on my watch list and I immediately try to trade them instead of waiting for a pullback to the 21, bounce, and then some tight price action. So even though I took a 3% loss, 2% loss, whatever it was on this, I do want to trade it again. And I did. I bought it with a break over Thursday's high. This is one where we can just use a downtrend line as a potential add point. So just basically over Friday's high would work as well. Friday's high was 1566. A couple days tightening up so we can get a lower entry point on this downtrend line. Again, that's always better. And then the other Argentina stock is GGAL. This is a bank stock. Another one I bought with a break over Thursday's high on Friday. Really nice move so far here. We ran from 12 to 18. That's about a 50% gain. Pulled back to the 21 EMA. Again, got stopped out on the 6 on this bar here. It sets up again and looks to be moving out here. So above 18 is probably where I'm going to be adding to this position because I did get a pretty nice entry around 1750. Adding to it, finishing off that position at 18, and then keeping my stop under the low from Friday or under the 8-day EMA, whichever is lower there. Then finally, I have two stocks that don't quite fit into a emerging theme. First one is CAVA. I haven't tried their food before. I've heard good things from it, but that could just be because the IPO is working right now. IPO'd on the 15th of June, and I want to switch this over to a 30-minute candle, because then you could really see the pattern forming up here. Just a downtrend line, nothing too fancy there. You could even draw it maybe below where it's not hitting that one high, but hitting the rest here. The low, I want to say, let me bring up the price. The low 47.50 is an area where it came into once, twice, found support. Continues to tighten up here. You could cheat into this at $49, but the real pivot is at $50 for me. So if I want to get into this position early, I'm looking at $49, getting my stop under $47.50. Then I can really size up the trade with 2% risk there, and then finish off the position at a break over 50, move my stop loss to break even. Again, kind of a performance boosting trade. Because IPOs are pretty whippy, they can really run on you, but they can break down relatively quickly too. So I would be looking to get my stop loss to break even, sell a little bit into strength to finance the rest of the trade, and then get going. But that's CAVA. And the last stock that we'll be covering in today's video is WEAV. This is an internet communication or internet content, 9th out of 197, so an A+ group strength rating. We've been talking about themes this entire video, so it's nice that we have that in a stronger group at least. This started with an unfilled gap up 25% on 760% the average daily volume, closing at the high of the day, and then continued to rally, pulls back to the 8-day, rallies, quick shakeout to the 21. So you can see at the kind of key moving averages that a lot of traders focus on, buying support has come in here. From there, so this moved from $4 up to $12, nearly a 200% gain there, pulling back to the 21 EMA, volumes lightening up. This is a very orderly pullback, which is nice to see. And then the last 3 days have closed right basically at the same price, which just shows that volatility is contracting here. What would be perfect here is if we get a shakeout under the 21 EMA, or if we gap underneath the 21 EMA, then recapture Friday's low with an oops reversal entry. That would really shake out a lot of the weaker hands here and set this trade up in an A+ manner. So that's obviously the type of trade that I would be putting on the most exposure. Otherwise, just a break over Friday's high, 11.05, getting the stop loss under the 21 EMA, 10.40. That's a pretty wide stop, so you wouldn't want to size that with a very large position. That's why I'm hoping for that gap down and then oops reversal, so I can manage my risk a little bit tighter for WEAV. And that's going to be the Breakout Watch List, sponsored by MarketSmith. I hope you guys enjoyed the video, and I'll see you in the next one.